What if the exact reason that thousands of property investors are sitting on the sidelines watching and waiting is the exact reason that those that take action actually benefit right now in 2026? Well, to help address this, I'm bringing in Adam from Benchmark Real Estate here in Cairns to talk about what's happening on the national real estate market, plus what we're actually seeing on the ground right now here in Cairns. We're going to be talking vacancy rates of Cairns versus Melbourne and how different those two markets are, what it actually takes to secure a great tenant, and what you should be looking at for a rental application, plus much, much more. So if you do enjoy this episode, make sure you subscribe and let's jump into it. Mate, we are 2 months on from the federal budget, which it's funny to be talking budget this far after I don't think I've ever remembered a time where...
Lucky us, eh?
Lucky us. What a time to be alive. What a time to be in real estate.
Fantastic.
But I guess the reality is it has changed how people are looking at real estate,
100%.
how the market's performing. And I guess today I really want to focus on the rental markets, both across Australia and in particular Cairns. What are you already seeing on the ground post-budget? Has Albo's predictions of $2 a week increases stayed in line, or are we seeing bigger changes on the ground?
We're seeing bigger changes on the ground generally. I mean, the Cairns market isn't, sort of based on a spreadsheet in Canberra. You know what I mean? So we're sort of doing our rent reviews every month, and the rents are going up. We sort of do a number of things, look at CMAs and reports and where they should be, and the average amount is more like $20 to $30 a week.
Yeah,
right?
Big jump.
It is, and some of those needed that anyway because they might have been a little bit on the low side compared to the market value, and that's why those are happening as well. But mostly, it's just a general sort of increase, which is maybe 5%, I suppose.
We've got a duplex that we own, so 2-bed, 1-bath times 2. Each one of those sides just went from $500 to $570 per side, so that was a 14% rental increase.
We just sold a place in Clifton Beach Road that's $550 a week. Tenancy is expiring in December, and that'll go to $600 a week.
Yeah,
you know what I mean? So there's your 10%, just under.
Big jumps.
Mm. And people are paying it. Like that's what it is. It's what it is. And if it was to come on the market, if the tenants don't re-sign, we've got to market it again. We'll probably be asking for $625, $630.
And I guess that's the challenge of these federal policies when you've got something that they're trying to craft the shape of Australia, but Australia, the Melbourne market performs so differently to the Cairns market,
Correct, yeah.
which performs so differently to Perth, that these national policies seem very short-sighted. With the tenants that you guys have in your properties, are you finding they're transient tenants? Are they people in Cairns for 6-12 months? Are they people in those properties for 4 or 5 years?
Oh, yeah, it's getting more towards that. So, it used to be where anything more than 18 months or 2 years as a tenancy was considered long-term. Now you're getting people that are staying put because the rental market's so tight. So the issue that we're having now is finding good tenants because all the good tenants are staying put, right? Because they're comparing cost of moving and everything like that to paying an extra $20 or $30 a week rent, yeah?
Is there also a fear from the tenants that they might not find what they're looking for?
Yeah. So we've got a few properties at the moment where the owners are moving in or they're selling or they're renovating, and the tenants we've been giving them more than enough notice. The minimum notice is 2 months. In some cases we've given them 3 or 4 months, and they're moving. They're supposed to be out in a couple of weeks and they still haven't found anywhere. Right?
Yeah.
So it's like battle stations. So that's a bit of a struggle, and we're getting the requests for references as well. And they're good
applying.
tenants. They're good tenants. They should get a place pretty easily. But with the amount of competition that's out there, they're just not getting it.
And the interesting thing I thought about this last budget is it was framed as helping first home buyers, getting more people into the market. But in my experience, it wasn't that long ago you could buy quite a nice house in Cairns for $350,000. But you look at the number of people that were renting in Cairns back then when you could buy it $350,000 versus today, and it's literally the same amount of renters. You can go back 30 years and it's still around a third of the population is renting.
Yeah. Well, the prices of Cairns have gone up, so it's very hard to find anything under 700 these days, which is a sweet spot for the first home buyers.
But I guess where I'm going with that is when people had the opportunity to buy into the market at $350,000, which to me was the definition of affordable housing at 350,000.
Yeah. But people thought it was expensive then too.
But a third was still renting.
Yeah. Yeah.
Where prices have doubled and still a third is renting.
Yeah.
So
Well, that's the same number across all of Australia, isn't it? A
Yeah,
third rent,
correct.
A third own and a third have a mortgage. Is that right?
Correct.
Yeah.
So I'd argue that like it wouldn't matter if property prices were 150,000 or a mil, because that's what we see across. Brisbane's got a very similar rental demographic to Cairns. So as we push investors out of the market, which is what these latest rounds of budget changes are designed to do, it leaves an interesting predicament for the rental market.
Yeah, well, look, based on what we're seeing with the inquiry from buyers at the moment, up until this self-managed super fund, whenever it is it the 10th or
Yeah,
11th
like
of August
literally.
or
So
something?
we're filming this. I think it's what is
6th? Yeah, 7th?
7th, something like that. Monday is the cutoff. So 4 days from now is the cutoff.
Yeah.
Which if you didn't have which I think it's actually the 9th, you need to have a contract by Sunday.
Yeah. Our phones are going to be going off today, put it that way. Yeah, or over the weekend.
Yeah, but then it's dead. Come Monday,
So then what happens? Is it like just nothing? This week we've got a couple of deals under the self-managed super fund, and we've also sold to first-home buyers and people that are buying their second home. So it's still a bit of a mixed bag of what's sort of happening. I think the days of the government budgets and everything, and the impact is the government impacts one thing, but also owners are expecting tenants to pay for everything. Rates going up and things like that, and I think those days aren't really, those days are numbered where you can expect to just jack the rent up and your tenants pay for everything.
But what's the options if we're sitting in a market like Cairns, 0.6% vacancies, the tenant gets the rental increase?
Yeah. Yeah, where are they going to go? Yeah, so they're going to stay put and they're probably going to put up with it, right? But as long as that property is getting looked after, maintained, and you're looking after the tenant, that's the most important thing I think investors need to realise now. You can't just expect the market to look after your investment or your tenants to keep paying for everything, because tenants are getting a little bit. There's minimum housing standards. There's all this insurance. There's a lot of
short of taking the owner to QCAT though.
They'll just move out. But
Go where?
yeah, this is the thing. And we get a lot of times when tenants are like, nah, I'm out, which is fine.
Go. 100%.
And then when we're like, well, because we only give them, so we renew the lease, they get 2 months, then 3 or 4 weeks before the end of that, if they still haven't signed, we withdraw that offer and then we go to market.
Yep.
So in that week, we give them a week to sort of get back to us. We find that, more often than not, the tenants are signing the leases and staying put.
And it sounds like a greedy landlord statement, like jack up the rents, whatever, like where are they going to go? But the reality is that is the current market.
Correct.
That is the lack of optionality in the market. And this changes at the federal level doesn't make more investment properties in the market and give tenants more choice, which is
That's right.
an interesting conundrum. I was chatting to a guy the other day who basically was like, rents can't go up forever, which he has a point. Affordability ceilings will get hit. But there's also a concept of liquid and illiquid demand. When someone's going out to a restaurant, when someone's going to the cinema, that is very liquid. People will do that discretionary spending depending on how much excess income they've got. Where when it comes to housing, that's very illiquid. People will pay whatever they need to keep a roof over their head.
Yeah, but I don't think back to that $2 thing. I think it's way more than that. It's 10 times that if we're looking at the numbers realistically. Yeah.
Where do you think, so self-managed super funds basically has come to an end. By the time this gets released next Friday, self-managed super funds finished. Do you think we're going to continue to see much investment activity in the market? If you remove the self-managed super fund investors from the buyer inquiry you're seeing today, what does that look like?
Look, it's self-managed super funds have been a thing for a while. It's just obviously more recently it's gone up. That inquiry and those sort of buyers have increased. I just think you're going to have your mum and dad investors still doing their thing. Cairns is really affordable still. There's great returns in Cairns, some of the best in Australia. So I think the smart money is going to still purchase, and they'll probably get really good prices because of what's happening in the market. And there's a bit of a lull, and more properties available. And there was a rolling average, I think, was around 700 properties on the market at any one time in Cairns, but that's now looking like 1,400. That's the ones that aren't under contract and aren't under offer. So you've almost got double the amount of properties on there with probably half the amount of buyers.
Yep.
So the investors are still going to be, it still makes sense.
Definitely.
So I don't, mate, you'd be a genius to sort of tell what happens, but based on what's happening now, it'll be interesting to see how the rest of August goes with inquiry for sales.
Definitely.
Right?
And I think, looking into like when it comes to interest rates, it does feel like it's anyone's guess, but I think like odds on the market is predicting there to be no more interest rate rises currently for the rest of the year. With the way the Sydney and Melbourne real estate markets are playing at the moment, I think there's a really good chance we actually start to see interest rate decreases next year, which then that starts becoming very attractive to get back into the property market if you're paying less for your money.
Yeah, and I think there's a collective sigh of relief nationwide when the interest rates are on hold. Everyone's, and you do see that, like, say they make an announcement on Tuesday, Saturday open homes are a bit more, let's be honest,
Money's cheaper.
Yeah. So there's that. But yeah, the owners, the landlords are always going to say rates are going up, interest rates, this and that, and things like that. But also, I think there's the owners that want more rent and more return, which is good. But I think it's warranted, because that's where the market actually is too. It's not just because their costs and holding costs and everything's gone up. It's also because the actual rentals are moving too.
Ultimately, it's supply and demand. If
100%.
we were at a vacancy rate of 5%, I would guarantee rents would be going down.
It's very rare that we have a rental on the market for any more than 7 to 10 days.
And I guarantee you're probably getting applications day 1 or 2. They're just not people you want to put in the property.
In the first hour. Yeah.
Correct. But yeah, I think that like people are quick to blame investors for taking advantage of the situation. But the reality is if it was reversed and we're at 5% vacancy rates, 1 in 20 properties was sitting vacant all the time, then rents would actually be coming down.
Yeah. And think about, investors that are people that they might only have one property, or they might be rent vesting, you know what I mean? Or they might have their principal place of residence, and they're working hard to maintain 2 mortgages and all that sort of stuff too. So it's not like they don't deserve those kind of rewards and that over time.
It's a balancing act across the market. But if from like the federal government level, they've messed with the equilibrium in the market, that has flow-on effects. And, Cairns has been relatively immune to the price drops. I don't think the market's been affected too much here. We're certainly well above where we were 12 months ago.
Yes.
So while the market may have pulled back slightly.
And I think that's what people need to keep in mind as well. Like,
we haven't deleted 10 years of growth.
No, that's right. And landlords are ringing and asking me for what I think. And if you've owned property for any longer than 3 years in Cairns, like
you are well ahead.
You are well ahead. And this lull that's happening now is going to be a blip on the radar. And it only really matters if you're selling.
Yeah.
Right?
Correct.
Which you're not.
Yeah.
So
selling or accessing equity.
Yeah.
There was an interesting article I was reading about the first home buyer deposit scheme and all these buyers that got in with a 5% deposit, especially Melbourne, Sydney, Brisbane. They're now upside down on their mortgages.
They can't afford it.
Which, you read the comments and a lot of people are like, oh, it only affects you if you sell, it only affects you when you sell. But it means that you don't have access to any equity if you want to go out and buy a car and borrow against your home.
There's that, and there's also a mental thing too. Like
100%.
how would you feel if you've gone and bought an $800,000 home, and then next time you look, it's worth $700 or $750 or less? You know what I mean? It would just be, I'd be spewing.
Especially when you'd spent 5 years saving the $50,000 deposit.
There you go.
There
you go, and that's just evaporated because of whatever government policies or a market.
But if it's gone, like if you've gone from putting $50,000 into a property to now the loan being upside down $50,000, you've like effectively wiped off 10 years of like you busting your ass and saving, which is...
this wouldn't be a nice feeling.
Thank
God we don't. We're in Cairns.
Cairns has been very fortunate. I think there'll definitely be some buyers that have bought in the last couple of months that'll be spewing.
Yeah, but I think also it's probably one word for them. It's probably just becoming honest. The market, it's been so redlining for so long that now it's like sort of taking a breather, catching its breath.
Which you look at the fundamentals, and I guess right now for anyone in that position that has bought property in the last couple of months that isn't ahead, maybe it has pulled back a little bit and they're a little bit under of what they paid for it. The fundamentals, especially in the Cairns market, are so strong. The rental market's moving so quickly. There's such a lack of land supply. To build anything so fucking expensive.
Yeah, and takes so long.
That I can't see this being anything more than a momentary blip on the radar.
Yeah, I agree.
Especially like the hospital development, like that's going to create so much work.
Yeah, and Cairns is a fucking beautiful place.
Beautiful
Like, why
place
wouldn't
to
you live here? You know what I
100%.
mean? You know, I've been here 8 years now. Okay, this is home. Like, it's coming from Melbourne. Like, you go to Melbourne now, and I get down there quite a bit for different things. Family and friends are still down there, and I always say to people, it's like a monochrome, greys and blacks, right? In here, it's like Technicolor. You know what I mean? And there's a lot more energy as well. Like, everyone's default sort of emotion down there's like a bit of frustration.
Yeah.
And you know, unless you get out to the regional areas.
Yeah.
And there's some comparables too in the Melbourne market and the regional areas too. You know, Bendigo, Ballarat, returns, all that sort of stuff, and the price to get in there too. So, yeah,
Melbourne's an interesting example. It was something I wanted to talk about today. In particular, the vacancy rate. So, how many properties are vacant on the rental market?
Yep.
And I think it, paints a really interesting picture. We spoke about St Kilda as being one example.
Yes.
Currently, St Kilda's sitting at a 2.6% vacancy rate.
Huge.
Which is, considerable. When you look at, speak to economists or look at reports, essentially they class a 3% rental market as a balanced market. Anything under 1% is considered a stressed rental market.
Right. Yeah.
So at 2.6...
Well, Cairns has been stressing for years. I haven't seen it anything less than 1% since we've been here.
And you look at what rental prices have done over that time.
Right.
In a market like St Kilda with a vacancy rate of 2.6%, you would be in a position as a property manager or an investor that your tenant selection becomes very limited.
Yeah. So you're going to have to put on the rose-coloured glasses when you're looking at applications just to get people in and start generating income. Why is it just it's not an oversupply. I mean, there's a lot more property available there. You would
There's
think
a lot more
it's a bit
people.
more density. Yeah.
There's a lot more people. So, the vacancy rate really is a picture of that supply and demand we spoke about.
Yeah.
You've got plenty of demand being Melbourne. Like, there's a whole lot of people. I think it's the second biggest city in Australia.
Yep.
So there's a whole lot of demand there. But for there to be a vacancy rate of 2.6 just says that there's a whole lot more supply.
And it's not like the rents are expensive either.
No.
You know, comparable here, I think we looked at Edge Hill as a comparison to St Kilda, right?
Correct.
Rents are around $550 average for, say, a 2-bedroom unit in Edge Hill, and the same is true for St Kilda. And I think the prices to get into St Kilda to buy in there are around the same as well.
Correct. Very comparable markets, Edge Hill versus St Kilda.
Yeah. And it's the same kind of vibe too. You know, Edge Hill's got this sort of
Cafes
and all this sort of stuff.
Restaurants.
St Kilda's much the same with Ackland Street and around there as well. Partied a fair bit in St Kilda back in the day, so I know it quite well.
And Melbourne's an interesting one at the moment because in the investor circles, in the investor forums, there's a lot of chat at the moment about Melbourne being a great spot to invest.
Yes.
And that's an interesting one because you look at the stats, you look at that 2.6% vacancy rate, and that means that your property is likely going to sit vacant for 3 or 4 weeks at some point to find the next tenant.
Well, you'd probably want to buy something that's got a tenant in place.
Tenant in place,
with a lease that's sort of generating, whatever the return is. But
eventually that tenant will move on though, and then you're sitting there. The other interesting thing with the Melbourne market, Melbourne's been a huge beneficiary from the immigration that we've had over the last 5-6 years.
Yep.
Post-COVID, Melbourne's really received a big chunk of all those people coming into the country. I do wonder with the political landscape, if we see any changes, if we do actually move to cutting immigration considerably, I wonder what sort of effect that will have on Melbourne.
Yeah, I think we do a bit of work with different immigration and people that are rehousing refugees and stuff like that, or businesses that do that. And they're with these people that arrive from overseas for 10 years, right? It's not just, you're here, we get your housing and we sort you out.
Yeah.
That's for the first 3 years. They look after you. And then after that, it's a 10-year transition for these refugees and immigrants, right?
Yeah.
So after that 10-year period, and as you say, we're probably like 6 years into that, are these people just going to go and realise, Melbourne's not where they want to live? Are they going to go to regional? Are they going to come to Queensland? Or are they going to go elsewhere? Because there's also Melbourne's been the beneficiary of all that immigration, but a lot of people have also left Melbourne as well, or they want to leave, but now they're like, fuck, our house isn't worth as what it was, and we're all
What brought you to
Cairns?
Cairns? being an ex-Melbourneite?
Oh, mate, look, it was a few things. Financially, I'd spent a lot of money that I was paying back and stuff in my 20s, and
Cairns was more affordable on that
Cairns
front
was more
when you say
affordable.
financially? Yep.
Yeah. Cairns was much more affordable, and we were looking at what we could buy here compared to Melbourne, and where we were, and we'd done okay at a property there as well. So we basically just sold up everything, cashed out, and moved up.
Pretty desirable lifestyle up here, as you touched on before.
Oh, it's beautiful. Yeah, I mean, you live in paradise every day. Yeah, and it's not something you either get used to. Like, we live in Yorkeys. Yorkeys Knob, for those that aren't here, you call it Yorkeys. It's called Yorkeys Knob because the old Yorkshire guy was the sea cucumber, not because, and it's got the knob. Yeah. Anyway, there's a festival of the knob. Like, there's a king and queen of the knob. Yeah,
one of those places that just has a fun name.
There's no phallic symbols and shit like that, but it's okay. But yeah, so you're going down, and I say to the kids in the morning when the sun's coming up over the cane fields, and it's just, you just got to sort of appreciate where you live. You've got mountain ranges around you. The temperatures, what is it? You've got the aircon on here now. It's 25 degrees. It's probably the same outside with a bit of sun. It's really, really nice. And this is winter.
Yeah. Paradise. Yeah. Paradise. Coming back to the rental market at the moment, especially talking Cairns, there's no real resi developments that I'm seeing on any scale other than Mount Peter, which even that's sort of on a pause.
Yeah.
You've got the big hospital project about to kick off. You've got the expansion of the Navy base and the Marine precinct there. The expansion of the hospital is actually going to bulldoze about 500 apartments in the coming years.
Yeah.
What does that look like from a rental perspective?
Look, what's the only way it looks like? It's going to go up, right? Because there's less supply, and there's still going to be more demand if you're taking away 500 dwellings. Is there another 500 or even 1,000 that's going to get built to make up for that? I don't think so. There's a lot. The worst
thing with those 500 is a lot of them are like low to middle level apartments, stuff that rents out for like 500 a week.
Yeah. Nothing. And you're dealing with sort of, at that price range, you're dealing with, different socioeconomic sort of sectors of Cairns, and where are they going to go? You know what I mean? It's going to be interesting. But I think, selfishly, as a business owner and as a rent roll, if the rents go up, well then, that's a business thing for me. But actually people on the ground that are living here, I don't know, unless wages go up, like, the minimum wage has gone up to whatever it is in the last little while. Some of these people aren't even working. Most of these people are on pensions. Like, where are they going to go? And there's a lot of social housing getting built as well, but also that is limited too. And they've already got people waiting in line. Like,
there's already like a 3-year waiting list or whatever it is for social housing.
Yeah.
And social housing is an interesting one because any of the social housing that I've been into, you see a lot of those 3-bedroom properties actually housing 10 people at the moment. Like, they're not, they are very much congested, confined, overpopulated might be the right word there.
Yeah.
That I think a lot of that social housing is just going to take some of the pressure off the existing social housing, not actually house new housing.
So that sort of would operate within its own market, wouldn't it? A social housing market that would affect its own, tenants and stuff. So the broader Cairns rental market, I don't think is going to be, that's not going to have an impact on it at all. But because there's going to be less houses once again.
As investors buying into the Cairns market, is there a particular property type they should be looking at? Is there things you would tell people to avoid buying?
You got to look at something. 3 or 4 bedders always go good, right? And the 2-bedroom apartments are great as well. You just got to be mindful of your body corporate fees and things like that. Body corporate fees are just from one place to another. You could be selling a place that's like 4,000 per year, and then another place you're looking at 11, 12 grand. And they're not really all that different.
No,
right?
no, 100%.
Where does this even come from, right? I think your bread and butter type stuff, as long as it's presented well and it's easy for people to live in, and the area, because there's differences in Cairns, like the micro stuff in Cairns is like one street
100%.
in Edge Hill to the parallel street in Edge Hill as well, or, Manura or wherever's at the border, like Jensen Street and things like that. You can have totally different
I look at my
properties.
street where I live. I absolutely love where I live. Like
Yeah.
it's all 1,100 square meter blocks.
Beautiful
I'd consider like my house pretty reasonable.
Yeah,
You only have to go 2 streets over,
Yeah.
and it is not a good area.
that's right.
Like-
That's right. One wrong turn, and you're like, hey, here I am. And it's the same. There's that in Yorkies now. There's the social housing that's gone up on Cunningham Street.
Oh, yeah.
Right. And that's all fine. Like it's all good, but that's real. And then we've got our house, which is 2 streets away as well. It's
Yeah.
probably, now we bought at a good time. It's probably worth close to $1 million. But you've got just such a diversity of people and property in such a small area. So, and then that affects the pricing too, because if you're thinking, old mate you're sitting with, that's got 700 a week and it's this and it's the same specs. But you're on.
You're on a different street. Yeah,
exactly right. So that's an interesting part. That's something I haven't really experienced. Like in Melbourne, it's a suburb thing. You're in that suburb, and that's what
Yep.
it is. And in Cairns, it's more, down to the street.
2 things that come to my mind there. The first one is even on like the suburb level, if Menora is a great example. So Menora, if you're in sort of upper Menora, your insurance is maybe 1,500, $2,000. If you're in the flood area, your insurance can be 6 or 7 grand.
Yeah.
So like that zoning issue, I think is a massive one.
Yeah.
But then coming back to the rental market, if you buy a property that is in a better area, the chance of the tenant staying 4, 5, 6 years is so much higher than if you buy in an area where on face value the property looks good, the tenant moves in and then realises they've got a neighbour from hell next door.
Correct. Yeah. So I think with the insurance stuff, I've got a mate that owns an apartment in Yorkies and he lives in Mount Sheridan, and his Yorkies insurance for a 2-bedroom unit, he's got a 4-bedroom house on an 800 square metre block, is like $1,000 more than his principal place of residence in Mount Sheridan.
Yeah.
Right? And my insurance is now close to $4,000 a year.
Yeah.
We're just in the white zone in Yorkies. We didn't flood during Jasper. Or
Yeah.
anything like that. But yeah, these flood zones and things like
$4,000's
that.
getting up there.
It
$4,000
is, yeah. Well, it started 3,200 when we moved in there 6 years ago.
Yeah.
Now it's gone up $4,000.
When it comes to buying the right investment, do you think people factor in maintenance enough? Like if you're, for example, looking at nice little Queenslander cottage to buy.
Say Queenslander. Yeah.
It's just as
yeah.
comes to mind, like we were speaking before this podcast about, I think even on the podcast we're talking about maintenance and owners not doing maintenance.
Yeah.
Do you think people need to be more considerate of that when they're buying, that it's going to...
You've got to take everything into consideration, including maintenance and stuff like that, especially in a Queenslander. I've never met anyone that owns a Queenslander that is not doing maintenance at any one point in time, right? So there's that. But it's more around, some agents that are sales agents will give maybe an inflated rental appraisal on that. So you've got to be mindful of that. Always good to get a second opinion. And we do a lot of that for agents and people as well, to get a realistic sort of snapshot of what that rent would be. You probably want to look at, what am I here? You don't want to have a property, right, that only works if everything goes right, because things are going to go wrong,
100%.
Yeah, we've had a rental at the moment that's needed a new oven, needed a new dishwasher, smoke alarms, all this stuff that weren't really factored into their purchasing decision, and it's probably cost them, close to $20,000 since owning it, and they've only had it for 4 months.
And that probably comes to the importance of having a cash buffer. If you're buying and putting every single dollar you have into an investment and not leaving yourself with that nice, healthy buffer, things become stressful really fast.
That's right. So the stressed out landlords are usually the ones that are leveraged quite high and they don't have that kind of access to cash or something like that to pay for maintenance. And we can help support that sometimes, like with paying through the rent over time. And we just communicate with the tradies that we use and we have good relationships with. So that can sort of help support that. But you don't do it like people want to get paid.
Yeah,
they don't
100%.
want to. You don't do jobs and not get paid for it or get put on a payment plan. Like they're not a financial institution. So if you can't, there's always that. Was it a 3-month buffer or something like that?
Yeah.
Or is that something of whatever figure it is?
Yeah, for me, just depends on your situation, but like the bigger cash buffer you can have there, the better you sleep at night.
Yeah.
Like we had
Well, it's literally like oxygen, yeah. Cash is literally like
100%.
oxygen. Yeah.
We needed a full plumbing rerun at one of our properties the other day, and I think it was going to be like a $6,000 bill to rerun this plumbing. And I got the phone call and didn't even sort of registered. It wasn't a day ruiner because we had the cash buffer there.
Yeah.
We factor it into our yearly costings that we need to do this maintenance and shit does go wrong.
Yeah.
So when it get the phone call, it's like just the equivalent of someone telling me it's going to rain tomorrow. Like it's
Yeah,
we're going to
'cause
do
you've
it, but
got
we
that
knew
there.
that like this shit happens.
Yeah, but some people are ringing me saying, "Oh, I think we should sell."
Yeah.
Because this is happening. Or you've only bought 6 months ago, so I don't think you should sell right now. Just hold on by the.
And I
during
think
the tough
that's
times.
the interesting conundrum when the market shifts like it does from a sales perspective right now, and we are in a bit of a softer market. So there's people that are forced to sell that then will be accepting that low ball offer because there's not an abundance of offers to choose from.
Yep.
That creates a very interesting.
Yeah, selling under stress is never a good thing. Yeah, that's why if you can see it coming, and you know, oh shit, I'm going to be strapped and I can't actually get in front of that. But you got to be honest with yourself too. You know, some people get caught up in having properties.
Yeah.
I've got an investment property. You know, when they really actually shouldn't.
Yeah.
Because they don't want to spend any money on it. They just want to get the rent and pay their mortgage.
I think the big thing there is having a plan.
Yeah.
Having a plan, having your safety buffers,
Yep.
being thoughtful about it, and actually knowing your numbers,
Yep.
rather than just sort of thinking it's a good idea and jumping.
And that's
into it.
almost not a new thing. I mean, it should never be a new thing. You should also always have a plan when you're doing this stuff. But now
It's no different to business ownership or
Correct.
anything else.
Yeah.
Like,
But you can't rely on the market to do the heavy lifting for you anymore as
Correct.
an investor.
Yep.
Right? You need to be across everything that's happening, especially if you're buying a tenanted property. You know, we were talking before, like the only thing as a property manager that, you know, the solicitor's request is a lease, right?
which is a really interesting one. So to just frame that up a bit more, when you're buying an investment property, or even like we see it a lot of time with owner occupiers will buy a property with tenants in place.
Yep.
And their lease runs out in 4 months' time. They're going to inherit the tenant for 4 months, then move the tenant on before they move into the property and own it themselves. Super common situation. And for like an investor, already having that tenant in place is a big positive. They're not paying the leasing fees.
Yeah, and you get an instantaneous return on your investment. As soon as a settlement there, you're getting your money. Yep.
But there's a layer of due diligence there that is very, very uncommon. I sold real estate for 10 years and never had anyone request anything other than the lease, which now is mandatory under the seller disclosure statements.
Yeah.
What can people actually request? And what as a property manager are you comfortable handing over?
Well, it's just a condition of the sale. So whatever that the owner agrees to, I think that we need to provide that. So if I was an investor buying a property, I'd want to see the lease. I'd want to see the tenant ledger, right, to know that the tenants are paying on time all the time.
Yep.
An entry condition report.
Yep.
The most recent routine inspection, just to get really comfortable
Yep.
with
The
the
conditions
tenants that are
there.
in.
Yep.
Yeah. And knowing that, hey, these tenants aren't, 30 days in arrears and they're looking after the place, because that would be maybe be a deal breaker. Or if it's not a deal breaker, then at least you're going in there
Eyes wide
fully
open.
aware of
Yep.
what's happening. Yep.
Which that's all right to buy that property that has a terrible tenant in place if you're getting it at a discount and if the numbers make sense. Like,
and if there's not long on the lease and you can punt them anyway.
yeah. So to run through that checklist again, so we've got the lease, which should be included in the seller's disclosure statement. The tenant ledger, which outlines when they're paying rent and if they're paying rent on
Make sure
time.
it shows the arrears, because there is, the platforms and software that we use, you've got to, or you can tick show arrears or don't show arrears. You'll know what the pay to dates are anyway, so you can work out if they're paying late or if they're paying on time.
Yeah.
But there's another column on the side there where it actually has the days late and how much they
Yeah,
owe.
interesting.
So, that's a little thing that I would be, a little detail there.
Entry condition report, which is just bloody good to have when the tenants move
100%.
out.
Yeah.
Because there is plenty of owner managers, there is plenty of property managers that don't quite do the right thing on
They're
that
giving
front.
you a USB. Yeah.
And then the most recent routine inspection report,
Yep.
which probably isn't too important if you've inspected the property personally.
Correct. Yeah.
If you've personally gone there and looked at it, then you
But
probably
it
get
will
away with that
have
last one.
maintenance reported and things like that on there too. So
Bit of a shortcut to the building. Still get a building and pest, but it
Of course.
helps support that, I guess.
Yeah.
When it comes to tenant selection, so we're talking about getting that information from their previous landlord or previous property manager. What else are you considering when you're choosing the right tenant for a property?
We like to meet them in person. Okay, so I'm an energy guy, right? And there's people there, and if you've got people coming in and they're like, oh, we can't do this and this is that and blah, 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 and then they've got, probably undesirable if they're talking to you like that, and that's a red flag. That's a red flag straight away, right? Yeah. But yeah, if they're there, they've got all the information that we need is submitted when we need it. So we're not we actually don't chase them up. Yep. If they haven't submitted everything, that's their fault, and then it's going to go to someone else. And obviously, yeah, rental history is massive. If they're renting privately to a landlord that's doing it directly with them, we would check RP data or Cotality for the landlord information and check that owner actually owns that, and it's not actually another tenant that's says he's the owner or something like that in their subletting. So there's all that stuff you really need to get into.
A lot of tenants that I've met in the past fail to realise that it is a job interview.
100%.
You are
100%.
From
rock
the moment you walk through the door.
Don't rock up late, like all of that stuff. It's a whole. We are as agents judging you as soon as you walk in that door, right? And if you're there huffing and puffing and you're all, you're smelling like grog or all this sort of stuff, right? It's things that we look at, and those little details. If someone else is coming and they've got exactly the same application as you, then we get down to the real nitty gritty, kind of real pedantic type stuff. And then
at the end of the day, you're choosing someone to marry for a 12-month period.
Correct. We want to make sure that the people that we're getting in bed with are good people, and they're not going to, ruin the house or pay rent and all that sort of stuff. So it's
even if things go pear-shaped, because people do lose jobs, people do get divorced, people do need to move out of town for some sort of reason. You much rather want to go through that situation with someone that's fair and reasonable and
communicates. Doesn't put their head in the sand.
So it can sound brutal, the fact that it is somewhat a job interview finding a home, but the reality is it is a partnership you're getting into with someone, and you're signing a 12-month lease and committing to them for that period of time.
Yeah. And we have a really good relationship with all our tenants as well as our landlords. Yeah, it's important that, for our work, like you want to come to work and enjoy your work every day. You don't want to be dealing with, 20 shitty situations. We spoke before. As property managers, we're forever putting out fires, and that doesn't stop, right? But the less of those fires you're putting out, the better, right? So
that's where the better job you do is selecting the right tenants.
100%.
The less work
One
you
thing I
create
say
for
to
yourself.
people when I'm at listing presentations for new managements, look, Sean, we can put whatever rent you want, but it's not going to matter if we don't get the right tenant. And that's where we focus on.
That's an interesting one that I've seen time and time again over the years. Last property we rented out was back in January for ourselves personally. And we originally put the rent on, I think, on at 700. And at 700, we were getting applications, but they were terrible. Yeah. They were like, you could just tell straight away that was going to be a messy relationship.
They probably didn't even met affordability. It's that 30% income ratio, yeah?
Correct. We ended up moving it to 650 and started getting fantastic applications straight away, rented a couple of days after getting the price right.
Yeah.
But having that aiming for that slightly higher rent ended up costing us about 10 days in rent. And
this is another thing, right? Increasing the rent you're asking doesn't necessarily increase the caliber of person that's applying. Usually, the people it's the opposite, because they're desperate, they can't get anywhere else. Tenants are really savvy. Tenants know what houses are worth, and if an agent or a landlord's asking overs, you're not going to get the applications, right?
Well, I guess
and then just by changing it a bit, and those tenants have been great, I assume.
They have been fantastic. They've been absolutely fantastic.
There you go.
But I guess the thing there is a good tenant, or the best tenant in the marketplace at that price point, has their pick of properties at that price point. Yeah. They're the one getting accepted first.
Yeah. And a good long-term tenant, for however long, 3, 4, whatever it is, that's actually more profitable than getting an average tenant paying an extra $50 a week, because you're dealing with other issues. They might obviously late rent. They may not be looking after them. And this is a generalisation, okay? So having less rent is actually more profitable sometimes than having more rent, if that makes sense. Yeah.
And I think
over the long term.
And that's the sort of same philosophy I look at when we're looking at renewing leases and looking at where we charge rents. I always like to be slightly below market rent, but not by if the market's 670, I'll be at 650. I want to keep it very close to market. Yep. You don't want to be
and it's amazing what that $20 does, right? It's. I always say, because you've got because you got search criteria realestate.com, and it goes up in $25
Yep.
increments, right? So if you're at 650, you're in 650 to 675. But if you go to 645 or 640, you're in the other bracket. Then it opens the pool up again. You know what I mean? And then you're like, it was only $5, it was only $10, but you're getting good quality applications.
Good quality applications, and the reality is that vacancies cost money.
Yes.
If you have a tenant move out, it's going to take you, by the time you do the routine inspection, yada, 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 secure a new tenant, even if you start advertising before that tenant moves out.
That's right.
It'd be pretty rare that you'd turn a property around in under 2 weeks.
Well, we allow 3 days between tenancies to finalise a tenancy, and that is a bit of a risk in itself because you don't know what you're going to go into at an exit report. Right?
Yeah.
9 times out of 10 it's good, but for the off chance that it's not, and then you've already secured tenants to move in, it's a bit of a shit.
What would you say the average would be what would be the average changeover period from one tenant moving out to the next tenant moving in?
With us, a week.
Yeah, okay, that's pretty good. That's really good.
Yeah. Well, because as soon as we get a notice to leave, or as soon as we know, I like about a 2 or 3 week lead time for marketing. And as I said before, it's very rare for us to have a property on the market for any more than 7 to 10 days.
Yeah, so the next tenant's secured before.
Correct.
And I guess this comes back to those vacancy rates that we're talking about. 0.6% in Cairns, you're guaranteed a tenant within 2 weeks. 2.6% in other areas of Australia. It's a more balanced market. You might not actually find someone for a month, which, certainly affects your bottom line.
It does. And, well, it also affects your staff and the people in there because you're forever, and then you're looking at and then some owners are getting desperate because they've got mortgage and other
100%.
commitments and stuff, and then they just get me anyone.
Yeah.
And then down the track, it's just an absolute shit fight. So, yeah.
The danger. Mate, I've got some rapid fire opinions here. The goal of this is to go with your gut, give me a quick answer, and we're not needing to overly justify it.
Yep.
So let's jump into it, mate. House or unit?
House.
House, nice. Pets or no pets?
Pets.
Interesting.
Including a bird, including a fish. We had tenants that have moved into a property now. They've got a snake and a lizard. We asked them if they had pets. They're like, we've got a snake and a lizard. Like they're in enclosures. Like it's fine. But people get weird. Like, I've got a budgery. Budgie? It's the budget and the budgery, mate. The budget. Yeah. But that's it. Yeah. Let them have pets. Gone are the days we used to be able to put no smoking, no pets. You can't do that. And if the tenants, like, they're a family, it's got a dog or a cat, like, they're going to stay there, and they've actually probably got more. I suppose they're going to want to do the best that they can to prove that they're going to be good tenants.
You find as well, if someone's got like a pet and that, maybe deeper roots into the community, likely to stay here longer as well.
Yeah, exactly right. Yeah. Yep.
Interesting. Furnished or unfurnished?
Unfurnished. Unfurnished. Yep. Because guess what, landlord? You can't just say, if it doesn't work, I'm not replacing it. You used to be able to do that. Not anymore.
Yeah, that gets expensive fast.
It does.
Solar, no solar?
Oh.
Any difference?
Look, we do mention that on ads if there is solar, but it's got to be a pretty sizable, like a 10 kilowatt plus system would need.
Do you find tenants consider it at all? Will they pay more rent because they're going to save $50 a week on electricity?
No, like we wouldn't, because you don't know how they're going to use electricity, so you can't actually, right?
Quote a figure.
But you can actually, it may not, it'll add appeal, but it may not add, money. But there's definitely another box to tick. So if you've got solar, I think it's a good thing.
If you've got solar, it's a good thing, but
don't go out and get solar.
Yep, done. Pools or no pools? Swimming pools?
Pools. You will live in Cairns. Like, it costs the tenants probably average, because landlord pays for servicing and maintenance, that's $80 a month, $70 a month. And the tenants pay for the chemicals, which is probably around, depending on the size of the pool, it could range from, $50 to $60 a month or something like that. And then you've got, it's a pool. Why wouldn't you have a pool? The maintenance on pools and stuff, really, unless you've got a chlorinator and stuff, and I've learnt this the hard way because I've got a pool myself, and you're going to get more rent usually too.
When you say more rent, like $50 a week more for a pool?
20, 30.
Yeah, so it's sort of covering the maintenance cost.
Yeah. It's not a massive factor, unless it's like a really nice pool.
Showstopper. That makes sense.
But then it's probably going to be in a really nice house, which you're going to be asking for good.
Long leases, short leases?
12 months, option to renew. We work about 3 months out of renewing the leases, so around month 9, you're going to get a call, let's renew the lease, look at the rent, blah, blah, blah. That's if we want to.
Do you ever do 6-month leases if the tenant wants it?
It depends on the property and it depends on the owner. Yeah, existing rentals, I would do it because they're existing clients, but I don't usually like to take on anything less than 12 months.
Self-managing. Save on the property management fees.
What? It's the tax deduction, depending on your property, we're going to cost you less than $50 a week.
Makes sense.
Yeah.
Cash flow or capital growth?
Cash flow, I think, in Cairns, because, you know, we know how the capital growth's gone. We know what market's doing at the moment. If you can get a cash flow positive place, and the banks look at that as well, there's extra income. So, and there's a lot of places in Cairns that can be cash flow positive.
You won't go bankrupt making money, is my always.
Yeah,
my
that's
thoughts.
the thing. You won't go. Yeah, you won't go broke making a profit.
You're correct, mate. Final question: if you were buying one property in Cairns today as an investment, what is the exact property you are buying?
3 or 4 bedroom block home somewhere in the Northern Beaches, 600 square metre block. You know, that's it.
Love it,
That's it.
mate. Thank you so much for coming on. It's been an absolute pleasure. I look forward to talking to you soon.
Thank you.